You're with us here on Halftime Report on CNBC-TV18, live from the CNBC-TV18 Motilal Oswal studios. I'm Hormuz Patakia. With me is Mangalam Malu. As always, it's not a good start for the markets on what is a truncated expiry week, the monthly expiry. Of course, the Nifty currently still holding on to those 22,550 levels now after breaking below that 22,800 mark, which the bulls fought tooth and nail to defend for at least the last 8 to 10 trading sessions, but could not manage to do so after the gap down that we had this morning, particularly after the weak handover that came in from Wall Street over the weekend. The broader markets too are not faring any better. The mid-cap index is down over 1%, as is the small-cap index. And of course, there are plenty of stock-specific activity that is lined up in the broader markets as well. But there is a stock that is in focus right now, and that is United Spirits. And that's because reports are suggesting that the India-UK free trade agreement talks have resumed. Now, the key to tack will be the reduction in duties on imported scotch. Mangalam, good afternoon. You can tell us more on that.
Well, I can tell you more on what it means for United Spirits than the scotch itself, or as you and I would both know that we know nothing about scotch and obviously don't consume either. But tell you what, it is important from a United Spirits standpoint, largely because the India-UK free trade agreement talks, which were paused in May 2024, ahead of elections both in India as well as the United Kingdom itself. So now that they have restarted, all eyes will then be in one of the clauses of that free trade agreement, which was reduction in duty on imported scotch. Now remember, there are multiple duties in the alcohol industry. There is central, and thereafter there is state itself. So if this reduction in duty on the center isn't offset by any increase in state level taxes, then the MRP benefits or the price benefits from a bottle standpoint, as per Hina Nagarajan, the MD of United Spirits, who had told us earlier, could be anywhere between 5 to 15%. Lower price means better volumes. Or if you're keeping the price intact, then that means better gross margins. Either way, it is a positive. So that's something we'll most definitely keep an eye out on for United Spirits. And why just United Spirits? Just keep an eye out on a couple of other companies as well, which may use imported scotch as an input for them. But United Spirits more so, because a large part of their portfolio does involve imported scotch itself. And that explains why, despite the market being a little wobbly, that stock is holding up in the green. But speaking about the market itself, Hormaz, we have a bunch of mid-cap stocks which are coming off the lows. When we, looked at the market about an hour ago, we had the mid-cap index which was lower. We had 400 stocks which were advancing, but that number has now increased to about 727. So if you look at, names like Varun Beverages, that stock has moved to the high point of trade. Sona, BLW Precision. So some of these, F&O stocks are doing a lot better. We have Deepak Nitrite, which has moved higher as well. And don't lose sight of names like Indigo Paints and Swiggy as well, which have moved off the lows. So just a bunch of these stocks which are seeing some recovery from the lows, though the market's still in doldrums. We'll take a short break, come back, get you more on the markets and a lot of stock-specific action. Welcome back. All we've been talking about since morning and all of last Friday, second half has been the way the market has been selling off. So, as we look at it, the Nifty is currently at the lower end of today's trading session. There's a bit of a bump of a recovery, but that has been sold into vociferously as well. The Nifty is down about 1%. The Nifty Bank down 0.8%, had been underperforming all of last week, outperforming today by not falling as much. But, that doesn't save us any blushes. The small cap index is recovering a tad from the lows. The mid-cap index down by about 1%. What's interesting is that it is the Feb series expiry. There is a Wednesday in the middle, and we're on track for breaking history making history in a not so very happy way for the bulls. February so far, we've lost about 680 points. That's Feb series that we're talking about. And preceding that, we had lost, almost 3,000 points in the previous 4 series itself. So starting October, where we lost 2,000 points, November down 300 points, December down 164 points, January down 500 points as well, and follow that up with Feb. Why is this important? Because when the Nifty fell in the month of Jan, it was the first time that it fell for 4 months in a row, the first time in 23 years. Now, it will be losing for 5 months in a row if it does for the first time since 1996. So it's a 28-year-old record that we will be breaking for For the Sensex itself, over the last 32 years, this has happened just twice. So that is something we need to keep an eye out on. Remember, today's decline is more global facing. So that's why we have all the IT stocks which are losing. We have LTI, Mindtree, Wipro, HCL Tech, Infosys, all of them under pressure. And when the markets are not doing too well, the street looks at domestic facing names, the street looks at defensive names, and that explains why the FMCG stocks are doing relatively better. Rural facing stocks like M&M doing relatively better, Hero MotoCorp holding with mild green as well. Where do we go from here? Expiry week, we see action at the same strike for a straddle, which is a 22,600 call, premium of 120 rupees, 22,600 put should come up for you. That too has a premium of close to around 100 rupees. So the broad range that the street is hoping for this time around is at the lower level. We might see some support at 22,500. That's what the put writers at 22,600 are hoping for. On the way up, however, the call writers at 22,600 believe that any up move beyond 22,700 will see some selling. So 22,500 to 22,700 is the expiry range that the street is hoping for. But the way the market has been declining, who knows, what levels are we looking at on either side? Because if it was to bounce, then maybe some of the short covering. But if it is falling, then 22,500 is an important level to watch.
Indeed, and we were speaking to Himen Kapadia on Friday, and he mentioned that 22,522 will be the level to watch out for in case the index breaks 22,800. We are very close to that levels, and as Manglam was highlighting, rewriting history books, but not in a very good way. Take a short break. More on the markets and specific stocks on the other side. Stay tuned.
Hello. How are you?
Good.
I was doing CNBC for like 30 years. CNBC is only 25. So I
banking aspirations.
So I would say never to anything.
So I think it's an amazing time to work in India. If I were a founder who is starting up today, I would want to start in India. It's an amazing
in fintech.
place. In fintech. Who breaks the silent period? Only for in the business and professional setting, you will not have
Now on MobiKwik app, you can actually have digital cash. The motto for CBDC is not cash less, it is less cash.
Our focus is, given that we have such a large user base and also small merchant base, we first connect with them over daily life payments. Now after that, after looking at their KYC, their profile data, etc., we are trying to now diversify in terms of giving them access to the right investment product.
Followed with
Is that a space that you're going to look at?
now EA is becoming cheaper and cheaper. For sure it's a space that we are definitely looking at. We didn't sell a single share in the IPO. Neither did any one of our shareholders. That tells you about what they think about the future of MobiKwik.
Welcome back, and as Manglam was mentioning just before we went into the break, the recovery that was seen, a brief recovery, has been very swiftly sold into 220 points down on the Nifty, 750 down on the Sensex, and there are some significant losers in the broader markets, particularly within the mid-cap IT space, be it LTTS, Mastech, and also the likes of Emphasis and even LTI, Mindtree. So some of the significant losers coming in there from the broader markets. But moving on, the private equity and venture capital firms are betting big on Indian healthcare, and Vinny is here to decode all of that. Vinny.
Thanks so much for that. And private equities and venture capital firms, like you're mentioning, are betting big on the Indian healthcare sector. Now, PE and VC deals in 2024 have surged to 84 from 2023. It was just at 62. When you're looking at it, this is signaling growing investor confidence coming in for the sector. However, when you look at it in terms of deal value, that has seen a bit of a shift coming in. Investments in hospital and clinics have fallen sharply from $4.6 billion in 2023 to just $1.2 billion in 2024 this year. Meanwhile, this has shifted and the funding in medical equipment and devices had jumped nearly fivefold to $1.2 billion. And this is reflecting a growing focus on technology and innovation in the healthcare sector. Now, global investors, let's look at that. Global investors are eyeing the Indian healthcare sector. Whether you look at KKR, Blackstone, TPG and Advent, they have made big bets and acquisitions in the last few years. When you look at it, KKR with the healthcare global announcement that came in just yesterday, and moving on to TPG, which is acquired Manipal Hospital in 2023. We had Blackstone and Aster DM, the deal over there for quality care. That is also something as a big deal that happened in 2024, and KKR's Baby Memorial Hospital also was among one of them that was among the big deals that were made in 2024. So while Blackstone-backed Aster DM and Quality merger was also an important one, all these other deals that we're seeing on the screen also have taken place, and this is specifically after COVID and in those last 3 years, that is 2022 to 2025 post-COVID, when we've seen the pickup coming in. M&A activity is also heating up. Aster DM acquired Care Hospital, Max Healthcare took over JP Hospitals, as well as Fortis acquired Shriman Super Speciality Hospital, which were big deals that took place in 2024 in the pharma side and hospital space. Private equity exits, that is an important one to watch out for. There were certain exits that happened. While there were a lot of entries, there were a few exits, and a notable one that happened. One was Blackstone as well as TPG that exited quality care in India. This is marking almost 1.6 billion strategic exits that we saw happening in 2024. While we saw Chris Capital as well as Apex Partners made secondary exits in 2024. So the total secondary exits during the year were valued at $669 million. So let's move on. And what is driving this surge in investments in Indian healthcare? One, Indian healthcare remains underserved with only 1.6 billion hospital beds per 1,000 people, far below the global benchmark that we have to meet. Healthcare spending, that is just at 3.3% of GDP compared to 16.5% that is there in US. So a lot of opportunity on that front as well. And post-COVID awareness in terms of insurance penetration on that front has started increasing. Medical tourism, that's picking up pace as well, and that would fuel the growth going forward. So there are a lot of strong tailwinds that are there for the Indian healthcare sector, and that is what is interesting. And that is what PE and VCs are liking as well.
All right, we take that point. Thank you so much for bringing us up to speed with all that's taken place in the healthcare space and investment out there. Earlier today, we also caught up with Healthcare Global Enterprises Executive Chairman B.S. Ajay Kumar. He spoke about their deal with KKR and the way forward. Hear him out.
As unfortunately as the cancer cases are increasing, or we are able to identify more cases, it is becoming one of the issues. 1 in 9 may have cancer as we move forward. That itself requires a focused factory approach in the era of precision medicine. And HCG is known for precision medicine with research and academics. With all of that, it makes a lot of sense for us to come together with a company PE, like a global PE like KKR, which has expertise in healthcare. So together we can develop this into, much more growth can happen in HCG. And we see this as a growth opportunity for both of us. And when we created this strategic alliance with KKR and CVC exiting, the agreement has been that I stay with my stake. So there was no selling on my part. KKR has come in with this understanding, and they are very happy about this understanding. So I will continue to be the stakeholder. And also regarding moving forward, KKR, of course, will be in operations completely as we have issued the press note. And my role, as a founder will be more of a non-executive.
Right, with that, we'll take a short break. Come back on the other side. We'll focus on individual stocks, which are staging some bit of recovery, but by and large, there is a bit of decline in the market. The Nifty down 225 points. Stay with us on Halftime Report.
Welcome back. Time for our commodity corner now. Manisha Gupta caught up with Mansi Madan Tripathi, who is the country chair of Shell India, to talk about how Shell is focusing on its efforts today on the renewable energy space and how they are looking at their India growth picture. Listen into their exclusive conversation.
While we continue globally, obviously in oil and gas, we are also expanding into the entire renewable space. And I think in India we feel really good because we do have a very big presence now with the Spring Energy, which is about, I think, 2.4 gigawatts in terms of already installed capacity. And we are going in for another 1 gigawatt this year itself. Yeah? Okay. So I think that makes it a very substantial investment in that space. And also, I guess, as we look into the future, a lot of work which is getting done in our technology space, be it in terms of, how AI will be helping in terms of the analytics, getting better yields from all the other spaces, as well as, actual work on the material sciences, safety management, etc., etc. Those are some very interesting spaces where I feel really great about Shell participating in this whole transition.
So when we talk about India vis-a-vis the rest of the world, how are you looking at the demand growth coming in? Because there are a lot of promises, a lot of positives that India does showcase.
I mean, if you cut and slice any sector right now or any data, India will be in the top 5, if not in top 3. Right, and that's the beauty, right? Be it economy, be it how the growth is going to come, be it the income, be it, and renewable, non-renewable. India is in that very nice space of the growth trajectory of any major economy in that sense. So I think the challenge is for all of us, both as consumers as well as the industry players, as to how do we capitalize on this growth in a manner that commercially makes sense, at the same time does the job of the energy transition at the same time, right? And I think I do feel very privileged that India offers that space where you can do both in a very nice manner. So I think as Indians we should all feel very, very proud that we have waited many decades for this one, and we are finally there.
So as Minister Puri very rightly said that we have to look at our near-term profitability and a longer-term renewable goal as well. You think India is able to balance that right now?
Absolutely. And I think if I compare and contrast India's energy transition to some of the other markets, what strikes me is the "and" story, right? Like if I look at Europe or, for a matter, Americas, most of their energy consumption needs to be substituted with renewables. So the energy demand broadly remains constant. Whereas for us, like today we consume about 40 exajoules. It is going to become 80 exajoules by 2050. And all that incremental is going to come from renewable, but the base is not going anywhere. So which means that you need to continue with all your base, and then you need so much growth. So it's like and the "and" story, which very few countries can truly offer. And I think with the energy demand which India has, we'll need obviously all the diversification as well as the base. Yeah.
Mansi, one more point that almost everybody seems to be making is that while of course you are thinking global, but you are also working very regional. Does that work the same way for Shell also?
Absolutely, because there's no other way, right? It is at a local level which we need to find solutions. And I can give you, just an example which happened last week in lubricants. We were trying to see how do we source our reused oil. So lubricants has the waste oil basically, which if not coming back into the value chain gets burnt, which then leads to a lot kind of emissions. Now globally we said, okay, we want to do something about it, right? That's a global mandate. But when it comes to a local thing, we have to identify which workshops do we go to, which OEMs are interested, which supply chain can actually take care of waste oil, where does it find its way from a certification perspective, which policies need to be influenced, and all that work needs to happen at a local level, right? So I think the policy versus the execution part needs to always blend in for it to finally come to life.
So what are Shell plans going forward from here? I mean, as you said, you've evolved from one to another, and at a level that where you are right now. What is the sense from here on?
Growth, and
Shell's strategic plans as well.
Absolutely, because I think India remains a very important strategic market. We have the biggest footprint of Shell in terms of our talent in India. That's about 13,000 plus people. So we do see a lot of value which our capability centers will keep adding globally and to India from an employment point of view, as well as, leveraging on the vast human capital which is there. And likewise, I think on the energy ecosystems, we are already present in 5 verticals in terms of the energy ecosystem, and that's only going to get scaled, and we are also looking at other opportunities to grow. So a very important growth story, and we remain vested in India.